Pepe just smashed through major resistance, flipped all its key EMAs bullish, and is now eyeing higher price points, all while Bitcoin's massive bullish flag is pointing toward an all-time high of $142,000. With crypto ETF inflows surging, rate cut hopes rising, and meme coin momentum heating up, this could be the setup for Pepe's next explosive leg higher. So, if you have any interest in Pepe or you hold any Pepe coins, then you need to see this. So what is the latest Pepe news? And how will all of this affect the value of Pepe? In today's video, I will be answering these questions, and I am going to be telling you all of the new price-boosting information that has just come out about Pepe coin, and how there is still a high possibility you could become a... Before we get to our topic, let's take a look at the chart and see what the price of Pepe is doing on the 11th of August, shall we? Pepe's price today is around 1,200 units, with 4 zeros. Pepe's price is up 8% in the last 24 hours, with a 24-hour trading volume of $943 million. The token also currently has a market cap of over $5.1 billion, ranking it as the 35th most valuable cryptocurrency. Please keep in mind, these prices might have changed by the time you watch this video, and this content is not financial advice. So let's not waste any time and get into it. Before we get to Pepe news, we must cover the biggest news stories in the general crypto market first. Here's why Bitcoin price may jump to an all-time high this week. Bitcoin was trading around $118,500 at last check Sunday, up sharply from last week's low of $112,000. This trend may continue this week, and observers expect a new all-time high. Bitcoin price to hit all-time high as bullish flag activates. The daily chart shows that the BTC price has been forming a bullish flag pattern, which often precedes a strong breakout. This pattern started its formation on June 22nd, when it bottomed at $98,320 and peaked at the all-time high of $123,200, giving it a height of nearly $25,000. It has been forming the flag section, which is characterized by a falling channel. Now, there are signs that it is breaking out above the upper side of the flag. The price target in a bullish flag pattern is estimated by adding the flag's height to the breakout point, which, in this case, is at $117,000. Adding the two gives the price target of $142,000. The other catalyst for Bitcoin price is that it remains above the 100-day exponential moving average. It has also formed a break and retest pattern by falling to the support at $112,000, which was its previous all-time high. Top indicators also point to more gains in the near term. The relative strength index has jumped and crossed the neutral point at 50. Other oscillators, such as the MACD and the MFI, have also pointed upward. Federal Reserve cut hopes and EF inflows. Bitcoin price has potential catalysts that may fuel its surge to a record high this week. For example, data shows that American investors have continued to accumulate it. ETF inflows jumped by over $246 million last week, a big reversal from the previous week's net outflows of $643 million. The soaring Bitcoin demand, including from treasury companies, occurred as supply on exchanges has plunged to the lowest level in years, which is bullish. Meanwhile, the odds of the Federal Reserve starting to cut interest rates in the September meeting have jumped. These odds soared after the U.S. released weak non-farm payrolls data earlier this month. The probability will likely rise if the U.S. publishes weaker than expected consumer price index data on Tuesday. Economists expect the data to show that the headline CPI rose to 2.8% in July as the impact of tariffs started to show. If you are still watching, it would be massively appreciated if you could go ahead and smash the like button. It costs nothing and really helps support the channel. Also, keep watching to find out the latest Pepe coin news. Will Pepe hit 1,550 units soon? Pepe has mounted an impressive two-day rally, climbing to 1,233 units after breaking out from a descending trend line that has limited rallies since late July. The move cleared the 1,130 units and 1,200 units resistance levels, setting up a possible push toward the 1,320 to 1,350 units zone. Market structure has become more favorable for bulls, with all major EMAs flipping into a bullish alignment. This rally is being fueled by modest but notable on-chain accumulation, roughly $51,197 in net inflows over the last 24 hours. Technical indicators support bullish outlook. Daily and intraday charts show a broad shift toward bullish momentum. In the 4-hour chart, Pepe is trading above the upper Bollinger Band, which indicates there is a lot of buying pressure. The breakout was on increasing volume, suggesting conviction as opposed to a low liquidity spike. The 20 EMA on the 4-hour chart is currently at 1,129 units, and it is providing dynamic support. Confirming the trend, the DMI shows plus DI in the lead and ADX climbing toward 35, suggesting a strengthening bullish environment. The daily parabolic SAR is well below the price, which is further evidence of the upside thesis. The daily MFI at 45.93 shows that there is still space before reaching overbought extremes, and as long as there is market momentum, there is the possibility of another leg up. What's driving Pepe price today? With no significant news events emerging in the past week, Pepe price action appears driven primarily by technical factors and broader market sentiment. The meme coin sector has experienced mixed performance lately, with traders focusing on chart patterns and momentum indicators rather than fundamental developments. The absence of major catalysts has left Pepe price vulnerable to technical trading patterns, where support and resistance levels become the primary drivers of short-term movements. This environment often creates opportunities for technically oriented traders who can identify key inflection points in the price action. Pepe technical analysis. Mixed signals point to potential reversal. Despite the negative daily performance, Pepe technical analysis reveals several encouraging signs for bulls. Pepe's RSI reading of 54.83 sits comfortably in neutral territory, suggesting the recent decline hasn't pushed the token into oversold conditions. This positioning provides room for upward momentum without immediate resistance from overbought conditions. The Pepe MACD histogram currently shows bullish momentum, indicating that despite today's price decline, underlying momentum may be shifting in favor of buyers. This divergence between price action and momentum indicators often signals potential reversal opportunities. Pepe's stochastic indicators present a more mixed picture, with K at 68.39 and D at 68.29. While these readings approach overbought territory, they haven't yet reached extreme levels that would suggest an immediate pullback. Pepe price levels, key support and resistance. Based on Binance spot market data, Pepe's current price structure shows defined Pepe support levels that could provide buying opportunities for traders. The immediate support zone has held during recent weakness, suggesting institutional or large holder accumulation at these levels. Pepe resistance levels above current prices will be critical to monitor for any bullish breakout attempts. The token's position within its Bollinger Bands, with a B reading of 0.6155, indicates Pepe price is trading above the middle band but below the upper band, leaving room for upward movement within the current range. But this isn't the only big news in crypto recently. If you want to find out the best crypto to buy now, then click the video on screen now. Trust me, you do not want to miss out on these 1000x potential altcoins.
Something massive just happened, and Coinbase makes it even more interesting. This is the biggest amount that was seen this year. Billions sound like a joke now. Today we are talking about trillions with a T. But what is even happening? And why were we waiting 1 year for it? Well, let me explain. Disclaimer. Today, things took an unexpected turn. Analytics uncovered a jaw-dropping revelation in the crypto world. On-chain data nerds' watchful eye caught wind of some hefty transactions, totaling a mind-boggling 4 trillion Shiba Inu tokens. And the destination? None other than the major U.S. exchange Coinbase. This massive influx amounts to nearly $100 million in real-world currency. And wait, let's pause and soak that in for a moment. We're talking about a staggering sum here. To put it into perspective, imagine a mountain of cash tall enough to make skyscrapers look like pebbles. That's how colossal this move is in the realm of cryptocurrency. For starters, it's not every day that you see such astronomical amounts being shuffled around, especially in the Shiba Inu space. This influx could have significant implications for the market, potentially triggering waves of excitement, speculation, and maybe even a few sleepless nights for traders. But what exactly just happened? Well, according to a report, a whopping 4.29 trillion Shiba Inu tokens made their way to the largest U.S.-based crypto trading platform. And what makes this even more intriguing is that these tokens were scattered among just 10 wallets. Talk about a concentrated effort. And here's where it gets interesting. Tokens were acquired over 2 distinct periods, spaced 3 years apart. The first batch was snagged back in September 2021, followed by another round in March of this year. And get this, the savvy owners managed to snag these trillions of coins at an average price of almost twice as cheaper than it is now. Fast forward to today. And if these holders decide to cash in at the current Shiba Inu price, they're looking at a cool profit of around $41 million. And now let's take a moment to digest that. Sure, it might not be one of those jaw-dropping, headline-grabbing gains that crypto is famous for. But hey, let's give credit where it's due. Turning a modest investment into tens of millions? That's not too shabby. It's like hitting a home run in the world of crypto. Maybe not a grand slam, but definitely a solid base hit. And remember that big Shiba Inu transaction we talked about on Monday? Yeah, the one where Robinhood moved a whopping 600 billion Shiba Inu tokens? Well, as it turned out, it was all just Robinhood moving its own stuff around. But today's Coinbase situation, that's a whole different story. We're in the dark about why all that Shiba Inu ended up there. And let me tell you, the rumor mill is working overtime. People are coming up with all sorts of theories about who's behind it and what it means for the market. It's like a mystery novel unfolding in real time, and everyone's trying to crack the case. But this is just the tip of the iceberg. If the $100 million Shiba Inu move is going to be a success, then it's going to be a success. But if the known 100 million Shiba Inu move got your attention, get ready for something even bigger. In a major shakeup in the crypto world, Coinbase just saw its largest Ethereum outflow of the entire year. And we're talking over $1 billion here. This massive shift, as reported by CryptoQuant, has set tongues wagging and sparked all sorts of debates about what it could mean for ETH and the market as a whole. So, while Shiba Inu is seeing some hefty inflows to Coinbase, Ethereum is experiencing some major outflows. It's like a seesaw of crypto activity, with one token going up while the other heads in the opposite direction. According to CryptoQuant's latest findings, a whopping 336,000 Ether were pulled out of the trading platform on June 12, amounting to around $1.17 billion. This isn't a one-off thing either. It's actually the 5th time this year that withdrawals from Coinbase have surpassed 150,000 Ether. And get this, the size of these transactions has been all over the map, ranging from $400 million to $1.2 billion. So, if you're in a situation where you're 1.1 billion, it's a clear sign that some heavy hitters are making moves in the market. Looking at the sheer size and frequency of these withdrawals, it's pretty clear they're not coming from your everyday Ethereum traders. Nope, these moves seem more like the work of whales or big institutional players flying under the radar. See, transactions of this magnitude are usually way out of the league of your average retail trader. They're more in line with what you'd expect from heavy hitters, with massive stakes and some serious market strategies up their sleeves. And now, as for why they're making such massive moves, well, that's where things get a bit fuzzy. We're all just speculating at this point. But if we look back at history and how the market tends to behave, we might glean some clues. Remember when Coinbase saw similar big-time withdrawals for Bitcoin before the launch of Bitcoin spotted thefts earlier this year? Well, some folks are thinking that maybe, just maybe, the current Ethereum exodus is a sign that people are gearing up for potential Ethereum spotted thefts down the line. But hey, it's all just educated guesswork. For now. And now, If these withdrawals aren't just the exchange shuffling things around internally, they could actually be a pretty good sign for Ethereum's future. Here's why. When you take a bunch of Ethereum out of circulation, especially in such massive amounts, you're basically creating scarcity. And in the world of economics, scarcity tends to drive prices up. It's like basic supply and demand stuff, you know? And that's especially important for Ethereum. And that's why Ethereum is so popular. And that's why Ethereum is so true in the wild and wacky world of crypto, where emotions and market sentiment can swing things pretty wildly. So while we can't say for sure what exactly this big Ethereum exodus will mean for the market right this second, most folks tend to see moves like this as a positive sign in the long run. After all, reducing the supply of Ethereum floating around, coupled with the potential introduction of new investment goodies like Ethereum spot ETFs, could be a recipe for some serious price hikes down the line. But hold on. Before we all get too hyped up about the Ethereum ETF hitting the markets, there's a crucial point we need to understand. A top industry exec is sounding a bit of a cautionary note here. See, they're saying that when it comes to spot Ether ETFs, we shouldn't expect the same huge influx of cash on day one, like we saw with Bitcoin ETFs. Here's the deal. Bitcoin's got this pretty straightforward use case as a store of value, which made it easier for investors to wrap their heads around. But Ethereum? Well, it's a bit more complicated. Its value is tied to all of the value of Ethereum. There's all sorts of tetchy stuff like smart contracts and decentralized apps, which can be trickier to put a price tag on. According to Stephen Richardson, who's a big shot in the financial world, there's still a lot of work to be done in figuring out how to properly measure Ethereum's worth. Without a clear consensus on that, we're probably not going to see the same frenzy of cash pouring into Ethereum ETFs like we did with Bitcoin once. But hey, here's the silver lining. Even though day one might not be as explosive, many folks believe that in the long run, the Ethereum ETF could be a major changer for the whole crypto scene. Usually, the biggest things on the market are rarely visible to the public. They are often kept behind the scenes. And this is exactly what is happening right now. There's more than $1 trillion worth of risk as we speak. But this is the only way to make us go to the moon. Don't believe me? Then I'll prove you wrong. Today is a very, very important day for the entire crypto space. Disclaimer, the crypto market keeps crashing, pulling Shiba Inu price down significantly, and something bad just happened. The Bitcoin ETF's inflows from yesterday were revealed, and they are not good. We've now lost the 19-day streak of inflows with $65 million outflows today. People had been building a lot of anticipation because this streak of inflows was record-breaking. Everyone thought that from this point, the only way was up. But as it turns out, the crypto market crashed all of a sudden. It's really sad for people, especially those who invested heavily during the inflows, hoping to ride the wave of continuous growth. But here's something important. Some are speculating that this might just be a flush event. This is when the excitement is so high and so many people are buying in that the big players feel the need to shake things up a bit. By doing this, they can flush out the smaller investors and gain more power for themselves in the upcoming bull run. Here's how it works. When a lot of people start buying, the price goes up, creating a lot of excitement. The big players, or whales, see this as an opportunity. They might start selling off large amounts of their holdings, causing the price to drop sharply. This sudden drop scares off the smaller investors, who might sell their holdings in a panic. The big players then buy back in at these lower prices, increasing their holdings at a discount. A pretty similar situation happened in 2017. During the massive bull run, Bitcoin's price surged dramatically. But there were several sharp corrections along the way where the price dropped significantly, shaking out weaker hands. Each time, the price would eventually recover and go even higher, benefiting those who were buying in. The big players then buy back in at these lower prices, the dips. So, while it's a tough time for many right now, it's possible that this flush event is just a temporary setback in a larger bull market. Only time will tell how things will unfold. It's sad that these events can really shake up regular investors, especially those invested in Shiba Inu. The impact is pretty noticeable, with Shiba Inu decreasing by 7% this week. This kind of market manipulation is undeniably bad. It takes advantage of smaller investors, creating fear and uncertainty, and can lead to significant financial losses for those who can't afford them. However, despite being unethical, these tactics can't really be changed or stopped easily. The market is largely unregulated, and big players have the power and resources to influence prices. They can create these fluctuations to their advantage, while smaller investors often bear the brunt of these manipulations. Amid this slip, an analyst on X highlights that hedge funds and Wall Street firms are increasingly taking short positions on Bitcoin futures contracts, betting on Bitcoin prices to drop. Even though they might be holding long positions in the spot market to benefit from fee differences, this approach carries significant risk. If prices surge unexpectedly, these firms could face massive losses. Right now, between the current price point and slightly above all-time highs, there's $12 billion worth of short positions on Bitcoin futures, according to exchange data and trader notes. $12 billion is a substantial amount of money. And this shows just how serious these hedge funds are about their bearish stance. With the big players on Wall Street shorting Bitcoin, this strategy could end up backfiring in a spectacular way. And that's exactly what's happening now. The market is reacting to these short positions, creating a volatile situation where unexpected price increases can lead to huge losses for those betting against Bitcoin. It's a high-stakes scenario, and we're seeing the effects play out in real time. Even so, hedge funds selling Bitcoin futures isn't a new strategy. Often, hedge funds short the futures of a given asset while simultaneously buying in the spot markets. They use this carry trade to profit from the price differences. This tactic is common and has been profitable in traditional finance. However, Bitcoin is a different beast. It's a new asset class that operates outside the traditional financial system. This means that the usual strategies might not work as expected. If Bitcoin's price doesn't follow predictable patterns, these hedge funds could face massive losses. The risk here is huge because Bitcoin's market is highly volatile and less predictable than traditional assets. Hedge funds betting against Bitcoin in this way are taking a significant gamble, and if things don't go as planned, the financial fallout could be substantial. And Shiba Inu is feeling a strong impact from these developments. As of now, these hedge funds can only play with Bitcoin since there's only one cryptocurrency. Bitcoin is a crypto ETF currently trading, and that's Bitcoin. Hedge funds short Bitcoin futures to drive down the price, causing panic among small investors. This panic often spills over into the entire crypto market, including Shiba Inu, leading to widespread selling and price drops.